Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to a special late night edition of the live stream here. I was just kind of winding up the day and I wanted to hop on live because I was watching the news, going through some news stories, and of course the Middle East conflict has just escalated in a very big way. So before we wrap the day up, I wanted to hop on and talk with all of you about that. For all of you late night stackers out there, what we're looking at here is unconfirmed footage of U.S. and British or U.K. airstrikes on Houthi rebel positions in Yemen. And I want to talk about the fallout from this because it's already looking like there may be some fallout across the Middle East, and how we need to be getting prepared for this. This is an alarming development, to say the least, and the consequences of this conflict, I think, are in some ways being neglected by the market. And, I think it's important to get prepared for conflict, debt, inflation right now, because those are things that are likely to be the outcome. Part of that, of course, involves getting into hard assets, gold and silver. We talk about that a lot on the channel. You can buy your gold and silver at SD Bullion. It's our channel sponsor. If you're a new stacker, if you're just thinking of getting some hard assets, you can get some gold or silver at spot by visiting sdbullion.com/new. So check them out. Now, let's talk about what's going on. First of all, what these strikes consist of. So the U.S. and Britain, they're making a big deal about these being surgical strikes, very targeted, but it sounds like they're hitting a number of military positions, ammo depots, logistics centers for the Houthi rebels. Of course, this is in retaliation to the strikes the Houthis have been conducting on international shipping channels in the Red Sea. So the U.S. and Britain launched strikes from the air and sea, missiles primarily, I believe, Houthi military targets in Yemen in response to the movement attacks on ships in the Red Sea, a dramatic regional widening of the Israeli-Hamas war in Gaza. And what we are seeing here is now, day by day, new players are being drawn into this, and we're seeing a tit for tat. But this, I think, really could be the time when we cross a red line, or we may be getting close to that, and I'll tell you why in just a second. But according to this report from Reuters here, witnesses told Reuters that the raids targeted a military base adjacent to Sana'a Airport, a military site near Taiz Airport, a Houthi naval base, and military sites in Hajjah Governorate. And although Washington said there was no intent to escalate tensions, which is pretty interesting when you're conducting multiple airstrikes, the Houthis now have vowed to retaliate to any attacks, and that's the critical part here. Now, we're already actually seeing sirens going off at the U.S. Embassy in Iraq. So apparently already, this is according to the Jerusalem Post, there is the potential for an uptick in attacks on U.S. military personnel in the Middle East. And that is something we really need to pay attention to, because as tragic as that would be to have any U.S. military personnel injured severely or killed in this conflict, we've heard from the likes of Lindsey Graham that would be potentially a red line for open warfare against Iran. And so we may be on the verge of just such an event. So far, since October, U.S. military bases have been attacked 127 times. Now, with these strikes being launched against the Houthis, I have a suspicion this number is going to increase significantly. As I mentioned, in the Iraqi embassy, they're already potentially undergoing uptick in attacks following these strikes. And this is an article from yesterday. Well, today, I guess. It's just Friday now, but about Hezbollah. This was published before these attacks, these strikes, preparing attacks on U.S. military bases in the Middle East. So Hezbollah primarily operating out of Syria and Lebanon there on the Israeli border. They've been firing back and forth with the Israelis, but if they've been planning for increased attacks on U.S. military facilities, well, here's their excuse to launch all of that. And, one of the things we really need to be getting prepared for here is, I believe, the price of crude oil to move much higher, and that is going to have a big impact on inflation. We already got the inflation numbers from December. They were hotter than expected. We're back to a 3.4% year-over-year headline inflation rate, 3.9% year-over-year core. The only thing saving the inflation numbers this time around was energy. I think this is likely to not last much longer, this relief we've had from lower oil prices. And already we have seen the price of crude oil ticking back up. It's back up to about $73. I have a feeling that tomorrow this number may be going higher. Now, I mean, I don't have a crystal ball. I'm not telling you what's happening in the short term. But should these conflicts in the Middle East continue to escalate, and that is an if. I mean, hopefully cooler heads will prevail. Hopefully we're not going to see this devolve into a major regional conflict involving Iran and involving the shutdown of the Straits of Hormuz and, potentially something like 20% of global oil production being affected. But if that does happen, and again, it's looking more and more like we're headed in that direction, this number is going to be moving much, much higher. And one thing I think about too is with this ongoing conflict with the Houthis there in the Red Sea, the U.S., we've been shooting down lots of drones, lots of anti-ship ballistic missiles. In fact, that was what prompted these strikes. That was sort of the last straw, I suppose. The Houthis were launching anti-ship ballistic missiles recently following a stern warning from coalition forces. Now, think about this. I mean, we're shooting down all these drones, all these anti-ship ballistic missiles. These drones they're getting from Iran, they probably cost something like $20,000, $30,000, $40,000 to build. These interceptor missiles that we're using to shoot these things down, very expensive, potentially $1 million a pop, something like that. This is another reason that we should be concerned about this. I mean, how much do the munitions that they're using in these strikes cost? One thing that is for sure, despite the fact that there's going to be a lot of uncertainty surrounding this war, if this war does expand, I mean, it's already a very expensive conflict in terms of what we've already committed to and what we've already done. But if this gets out of hand, if this escalates, and it may very well be the case that that happens, the cost of this conflict is going to become enormous. And, we're already broke. The U.S. can ill afford this. So at the end of the day, we know where the money's going to come from. They're going to print it. They're going to monetize it. They're going to borrow it. And the Fed is going to be the ultimate buyer, I believe, because if the Middle East evolves into a broad conflict, we've kind of seen how the battle lines are going to be drawn here with the global South. The Saudis, a traditional ally in the region, they just joined BRICS. Iran and the Saudis, both in BRICS now, they both have come to peace after decades of conflict. It's very possible that we may find ourselves without a lot of our traditional friends in the region, and that means that the petrodollar system is going to go bye-bye in a very big way. That's a huge risk here. That's probably why the U.S. is so committed to enforcing its hegemony in the Middle East, is to defend the petrodollar. They know that when that goes, that's pretty much it for the world reserve currency status and the ability to export inflation endlessly, and it's all going to come back to roost. And, I know right now, silver is very cheap. Silver is under $23, I think, right now. I mean, it's incredibly cheap. A lot of people seem to have got in their mind that, silver is not an inflation hedge in any way, shape, or form. It's never going to go any higher. I mean, the sentiment, I don't think I've ever seen it in my stacking time as bad as it is right now. And, you can see that in the gold to silver ratio. I'm thinking that this has got to be near a bottom. Maybe not, but you want to talk about inflation hedges, talk to people who have experienced hyperinflations, Venezuela, Argentina, Turkey. Look at the price of gold and silver, especially silver, though, in those currencies, and you can see that it is an inflation hedge. It just doesn't necessarily act that way when you've got the world reserve currency and the kind of curious setup we have right now where the Fed is hiking rates. I mean, silver, I think, is a huge opportunity here. And not a get-rich-quick scheme or anything like that, but it is one way that you can put your money at least somewhere where it cannot be printed, cannot be devalued. And at the end of the day, with the way things are going with this conflict, with the potential for supply chain disruptions, for the potential for economic weakness brought on by a surging cost of energy and the need for the Fed to bail everybody out, I mean, I don't think it's looking good for the dollar here. So let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker out.